Okay, Council Committee Member Friedman.
Here.
Committee Member Dominguez.
Here.
Committee Member Hart.
Okay, what's the first order of business? Let's see, is there anyone here for public comment for an item not on the agenda? Okay, we'll go to item 1.
Thank you, Mr. Dominguez and Mr. Friedman. My name is Bob Samari. I'm the Finance Director, and we're here to review with you the status of revenues and expenditures in relation to the budget. So just kind of in terms of context, we come to the Finance Committee every quarter. So for the quarter into September 30, December 31st, March 31st, and then June 30. And the purpose is to give you a sense of how we're doing relative to the budget. Most of the discussion is really on the revenue side, because when we adopt a budget, the revenues are really important because they tell us how much we have to spend. And so knowing whether we are on track or not is important. So we spend a lot of time talking about revenues. And on the expenditure side, we don't spend too much time other than to tell you we're kind of in line with expectations. We aren't allowed to go over budget in terms of expenditures of what's been budgeted. So for example, in the general fund, each department has its budget. We can't spend more than that legally. If we see that we're going to maybe exceed budget, we'll come to you early on and give you sort of a warning about that. And if appropriate, we'll come to you and ask for an increase to the budget to cover any unexpected costs or any overruns we're seeing. And so as part of this presentation today, you'll see some of that going on. So we'll have you review the adjustments we're recommending to the budget. So the way we'll start is we will look at the general fund first, and I know that we spent a fair amount of time on revenues at the budget work session just recently, so I won't spend too much time on them, but I want to just point out sort of the variances that we think are important, and I will apologize in advance in that I'm sort of pinch hitting for Julie Nemes, our treasury manager, who would normally give this report, so I'm not as familiar with some of the smaller revenues as she is, but I'll do my best. So we'll start with revenues, and then I'll turn over to Ms. Tomaszewski. She is our accounting manager. She'll talk about general fund expenditures, how we're doing there, and then shift over to enterprise funds. And then, as I mentioned, we'll talk about some of the proposed budget adjustments. And we will, as somebody indicated, present this to the City Council. We'll just give an abbreviated version of this report. So starting with general fund revenues, this is kind of a recap of all the revenues, or most of the revenues in the general fund. The major categories are taxes, that's most of the revenues, other revenues, and then fees and charges, and I'll go into some of these in more detail. Just point out that in all the charts you're going to see for the revenues, that the first column of number does not represent the total budget for the year. It's what we call the year-to-date budget. And for taxes, what we do is we do a 3-year average to see what do we typically get for through December 31st. And we make that kind of our benchmark, and we establish that as a year-to-date budget. For the other revenues and fees and charges, it's really just a straight line analysis. So we take half the budget through December 31st compared to actual results. So what I wanted to point out sort of initially is that on the bottom line, we are trending above budget at December 31st. These numbers do not reflect the impacts of the fire or the debris flow and the 101 closure, which we'll talk about. But at least through December 31st, we were tracking pretty close to budget, slightly ahead. Looking at individual sort of revenues, starting with sales taxes, you could see that the first through December 31st, we're slightly ahead of budget. We've received about $11.2 million so far. That's 2 quarters of payments. We get monthly payments, which are just estimates or advances during each of the quarters. And then at the end of the quarter, we get it trued up. And we're always 3 months behind. So even though we've gotten essentially 2 quarters of payments, when we true up the books at the end of the year, that first quarter will actually be accrued to the prior year. The first quarter that came in on a cash basis was down 2.7%, and the second quarter was up 1.3%. And overall, it's sort of trending with budget. We do think, however, by the end of the year, we'll be below budget, primarily because of the impacts of the fire and the 101 closure. We could be as much as $200,000 to $300,000 below budget, but we won't know until those numbers come in. We'll see the first indication of that in March when we get the revenues for the quarter ended December 31st, which pick up December. property tax revenues, you can see, are actually well above budget. We expect to be closer to $600,000 above budget by the end of the year. This is information we get from the county in October of each year. So about 5 months ago, we got the data from the county telling us at least what the secured and unsecured portions were going to be, which is about 95% of the total. And based on what they've told us, we know where we're going to essentially end the year. The reason we're going to be above budget this year is primarily because we did so well last year. Last year, we exceeded our expectations. Our expectations last year is what we build this year's budget on. So when we do better, then we have less to grow. So for example, we budgeted a 5.5% growth this year. Because we did so well last year that raised the base, we only need about a 3% growth to meet budget. And that differential is about $600,000. We're not projecting at this point to exceed our growth of 5.5% from what we expected. We just have a higher base that's helping us this year. UUT, you can see we're slightly ahead of budget this year. It includes a number of sectors, so it's natural gas, it's all the various telephones like landlines, prepaid wireless, cellular. It includes water, it includes refuse, natural gas, electricity. Some are up, some are down, so it's a kind of a mixed bag. Most of that increase this year, or at least the trend toward the positive, it comes from the fact that we are seeing higher than expected revenues on the water side. So water revenues are subject to utility users taxes at 6%, and we're trending higher than expected. And Ms. Tomaszewski will get into that discussion when we get into the water fund. TOT, it's just slightly ahead of budget, but I bring it up because obviously we've had some impacts. But prior to the fire and prior to the debris flow, we were trending pretty close to budget. And then we saw a 25% decline in December, which is not reflected in these numbers. But we also then saw in January a flip of that. We had a 19% increase in January. So they virtually offset each other except for about $25,000. So if December we lost $225,000, January made up for that by about $200,000. So we're still down by 25, but really nominal dollars at this point. So we expect by the end of the year to be meeting budget, which is good. And in fact, we're hearing that the month of February is going to likely be very strong. So that could also help. And you could see, I just point out in the green that we are below budget, or at least below last year. And this is primarily because of the fact that we are phased out vacation rentals, but otherwise we are up. Other revenues, license and permits. This is primarily related to animal licenses. This is the biggest chunk of that revenue, about 2/3 of that. And animal licenses are just up and down. They're not very consistent from year to year. So the fact that we're trending down this year is that's just the nature of the beast. In the last 3 years, we've been up and down. So it's just hard to predict, but we kind of keep the budget fairly level from year to year. Fines and forfeitures, the lion's share of this revenue comes from parking violations. I would say about 90% of that. And you can see we are down at mid-year. And this is primarily due to two reasons. One, the second half of December, the parking enforcement officers and the police department decided to suspend issuing citations for the second half of December. And then in addition, while they're fully staffed, one of the staff in the parking enforcement officer division or operation is a trainee. So we have one person dedicated to training that other person, which it takes a number of months. So that's impacting revenues. But otherwise, they're pretty close to budget. And then the last one, or maybe not the last one, but at least one of the largest variances you'll see is in intergovernmental. That primarily almost entirely includes mutual aid revenues we get when fire department responds to fires across the state. We budgeted this year about $600,000, and we expect to be somewhere in the order of $1.4, $1.5 million. So it's a big variance. We've already received $1.2 million through December 31st, so it's a big number. Obviously, that's going to pay for the fact that we do incur a substantial amount of overtime costs in responding to these fires. So It does cover those overtime costs. There's sort of a profit built into that because we are able to charge for the use of equipment and some administration. So we always, whenever we respond to these, we typically see somewhere around a 10 or 15% profit margin, if you will, relative to our direct costs. And you'll see this when we get into the expenditure side. Ms. Tomaszewski will talk about the fire department. You'll see how that we are well above budget because of that. And then looking at fees and charges, just to highlight a few. Community development, you can see they're trending ahead of budget at mid-year. What's interesting is that, when you look at the two primary divisions, planning division and building division, planning division is actually down. They're about 38% of budget at mid-year, whereas building is about 56% of budget. On the planning side, it's not that they have less activity, they just have smaller projects that they're working on, so the dollars are smaller. They are working on some larger projects now, but those fees were paid last year, so we're not seeing the benefit this year. On the building side, a lot of activity with the ADUs, so we're seeing more revenues. We're expecting just on that category to be about $400,000 ahead of budget. We're expecting to be about $300,000 below budget on the planning side, so still netting to the positive. Parks Recreation, this is really just a timing thing. It's a very seasonal revenue that they get because of all the camps going on in the summer, primarily in July through September. So this will normalize by the end of the year, and we expect to hit budget. Public Works, they are below budget on the revenues. This is primarily because of staffing. The revenues that are in the Public Works Department in the general fund are from the engineering division, and they charge out their work to capital projects. And when they're down staffed, their revenues are down as well. We'll see a sort of an offset on the expenditure side because when they're down staffed, we have expenditure savings for salaries and benefits. It doesn't quite make up the loss of revenues because of how they charge for their time, but there is a kind of an offset there. And then lastly, reimbursements. This is really just a timing thing. We record most of these charges. These are interfund charges. We record most of those at the end of the year. So again, it's a timing thing. By the end of the year, we expect to be at budget. So I'd be happy to answer any questions. Otherwise, I'll turn it over to Ms. Tomaszewski.
Mr. Friedman?
Just a quick question on what happened last year with the library, because I see the variance is 2,300% and the 23,000 was the actual, and this year it's 570,000. So what was going on last year in the library or is it this year that's off? Which one is it?
Yeah, I'm going to have to get back to you on that. I don't know the answer to that. That's a good question. Oh, I'm sorry. Norma Cervantes is here. She could probably answer.
So Chair Friedman and, sorry, Chair Dominguez and Eric Friedman. The difference was that last year we had not received the county per capita. And this year we have. So we receive half before. This year we received it by December, and last fiscal year we did not. We didn't receive it until I believe it was January or February. So that's the big difference.
You could probably tell us why that happens, coming from the county, so that we can chalk that up to a timing of payments.
Exactly.
Okay, thank you.
Thank you, Norma. Okay, so with that, I'll turn it over. Thank you.
Good afternoon, committee members. As Mr. Samario stated, I'm Jennifer Tomaszewski, and I am the accounting manager for the finance department. I'm first going to apologize as I've been fighting a cold and I can't stop coughing, so I'm going to apologize ahead of time. Okay, so in this first slide, this is the general fund expenditures listed out by department. And the main takeaway with this slide is that we see at mid-year we have about a $1.2 million savings compared to the year-to-date budget, which is also based on a 3-year trend as well. And the reason I wanted to point this out is when we look at where we ended the year the last couple years, we've seen at year end that gap in the last 2 years was about a $7 million gap and then a $4 million gap last year. And the main reason for that was there was across the board there were several vacancies throughout the general fund departments. And I wanted to point that out that There still are several vacancies, but we can see that that gap is shrinking. Specifically with regard to the police department, they ended the year last year with about a $2 million surplus, or I shouldn't say surplus, a savings compared to the budget. And the lion's share of that was related to salary savings. Whereas right now at mid-year, we see that they're slightly over. And the main reason that they're over at mid-year is a lot of those positions have now been filled. And in the first few months of the year, they have more of their overtime costs for special events such as Fiesta and 4th of July. So we see that that's much, more in line with the budget. And those special events costs should be less in the second half. So staff will be monitoring this, but we're not seeing those big savings. We do still see that Public Works, Parks, Library, Community Development, they still have vacancies and there are still savings there, but they're much smaller. So that gap is closing. And then lastly, I just wanted to point out that with fire, we actually see that they're over their year-to-date budget by a little over $1 million. And as Mr. Samario stated with the mutual aid activities, this is solely related to mutual aid activity. So the department budgets very conservatively because it's hard to predict what the fire seasons are going to look like from year to year. So they tend to keep those budgets low. And then in the fourth quarter, we bring back an item to both your committee and to council to true up those mutual aid activities. So we see the costs are up here, but we do know that those revenues are also coming in substantially higher as well.
On that fire question, so is there any reimbursements from federal on these when we provide mutual aid? Because I know a lot of times a lot of these costs are reimbursed through FEMA or whatnot, but are these just because we're providing the aid, we don't get any of that reimbursement?
We do get reimbursement. I believe it's a state contract that we have with CAL FIRE, maybe. So not necessarily FEMA, but the mutual aid revenues do come from CAL FIRE.
And ultimately, the monies do come likely from either FEMA or Cal OES. They're just funneled through the lead agency. So like Cal Fire, for example, they're going to have their own claim for the disaster that they'll submit to FEMA and OES and get money back. And they'll use those funds to reimburse all the agencies that help them through the mutual aid agreements that are statewide agreements. So the money we get for our costs won't come from DFEMA or Cal OES. They'll come from Cal Fire. All the other non-fire costs will come from FEMA and OES related to disasters.
So again, just to recap on this slide, we are still below budget at year to date, but we do need to be monitoring that throughout the last 2 quarters of the year. So the next section of my presentation relates to the enterprise funds, and I've broken these out into 2 separate slides. This first slide being solid waste, water, wastewater, and downtown parking. So first for solid waste, we see that revenues are below budget by about $761,000 and that the expenses are down about $836,000. The revenues are below budget. This is based on when the budgets were prepared, there was an estimate, an assumption of about a 5.3% rate increase, and this related to the Resource Recovery Act. The Resource Recovery Project. Subsequent to the budget being set, it was determined that rate increase would be reduced down to 2.1% to account for the tipping fees with the delays in the Resource Recovery Project. And as you see here, this is the main impact to that. I believe it's my understanding that by year end, the lost revenues will be absorbed by the solid waste reserves. On the expenditure side, we see the savings. Really, this is relating to timing differences. There's a biannual payment that's made for household hazardous waste and green waste twice a year, which is not yet included in this number. And in addition, Marburg is late on their billings, so there's only 5 months worth of costs there as well. So in the water fund, we see about a $4 million surplus in revenues. $3 million of this relates to increased water services, so water charges. The main driver here is when the rate models were set, they make certain assumptions of revenues coming in at the different tiers. And what they're seeing is revenues are coming in at the higher tier 3, which is more expensive. So that's the majority of the water increases there. There's also been 2 reimbursements from, now I'm going to have to, COMB, which is Kachuma Operation Maintenance Board, and Kachuma Conservation Release Board, for prior year reimbursement of operating expenses. So that's the main reason for the $4 million overage at mid-year. On the expenditure side, we see about a $2.9 million savings. And the largest single item here relates to the desalination facility. At the beginning, the first few months of the year, the facility was operating intermittently as the project completed, and they were working out the bugs with the plant. That has now been resolved, and they don't anticipate additional savings because of that, but that's the single largest item there. Closer towards year end, there will also be additional savings of about $2 million in the delay for the debt service payment, which was delayed to fiscal year 19, and that's about another savings of little less than $2 million. So on the wastewater fund, there's a couple items that are causing this to be slightly below budget. There are going to be certain costs that just haven't happened yet, will happen in the second half of the year. There's some cleaning costs and some other contracts that have not yet occurred. And then there's also some of the savings relates to conservative budgeting, which I believe staff are working on for next year's budget. But the main thing I wanted to point out here is that we see a large variance from the actuals at 6 months last year. And the main reason here, it looks as though they're spending more, but really this is the result of one-time capital outlay transfers, which skew those percentages quite a bit. So, and then just lastly, downtown parking, they're showing about 256,000 revenue loss. This is almost all related to the Thomas Fire. They were closed for 10 days, and then they were open and not charging up through Christmas. And usually in December, this is one of their largest months for collecting revenues.
Can you tell us in layman's term what a capital outlay transfer is, please?
Those are usually, so you have, when we're budgeting our costs, we look at the costs for operations, and then we look at capital costs. So operations are your routine costs you see year to year when you're managing an operating budget, whereas capital outlay, those could be, for special projects, they could be transfers for, it's
One-time costs?
one-time costs, mostly project related.
So we're just transferring these funds to another account?
Correct. The operating fund funds the water capital fund, where those capital costs are incurred.
I'll add to that. So for all of our enterprise funds, we sort of maintain a capital fund that's separate from the operating fund, because when you start mixing projects that have multi-year life with an operating budget that's annual in nature, it gets confusing, and it's harder to track budget to actual comparisons. So the way we fund our capital program is the operating fund will transfer monies over to the capital fund from revenues or from reserves, and then we'll account for those projects in this capital fund that could exceed 1 year. And those transfers sometimes will go, 1/12 per month per year, but sometimes we'll just do a lump sum transfer. And I think what was indicated here is that the variance here is caused by the fact that we had a bigger one-time transfer at the beginning of the year. And so that's what's causing that variance, at least from last year.
Great, thank you.
So that's it for the first slide, and we're also going to see this same percentage variance on the airport fund as well. So here we see that there's a slight savings on the airport expenditures, and most of that is salary or vacancy related. But I did want to also point out we see a large percentage swing here as well, and that's for the exact same purpose. There was about a $1.2 million transfer that created the majority, that shows the it appears that they're spending more than they were last year, but again, that's capital in nature, and we see that fairly often. On the golf in the golf fund, I just wanted to quickly point out we see about $120,000 save or revenue deficit at mid-year, and when we in finance calculate what that year-to-date budget is, we look big picture, total revenues, and we look at a 3-year trend. Whereas the department goes in and they get very granular and look at each account, and they do a much more thorough projection of what the cost will be, and then also what their year-to-date budget would be. And in this case, golf staff believe that 120,000 is probably more conservative. It's probably closer to about 78,000. And when you're comparing revenues, in the first 5 months, actually revenues were tracking fairly close to budget and actually higher than they were coming in last year. But in December, obviously, when the Thomas Fire hit, the Golf Fund took about a $57,000 loss because of the Thomas Fire. So that's the majority of what we're seeing up here. And staff also project that gap is going to continue to close and be somewhere closer to about the 50,000 mark by year end. And then on the expenditure side, we see about $180,000 savings. And there's actually two things going on here. So back in 17, when the city entered into a contract with the new management company to manage the maintenance and operations of the golf course, there were several golf staff that were moved to the general fund. The decision was made to move those positions over to the general fund, and then the golf fund was contributing to help pay for their additional costs until I think some of them retired, and then a few others were actually placed into permanent positions. At the end of 17, the last two positions were placed into full-time positions, which no longer requires the general fund to be making the golf fund to be making that annual contribution to the general fund to help offset those additional labor costs. So that's about half of that savings. And then the other half relates to the management contract itself, because there's a 1-month delay in their billing back to the city. So at mid-year, there were only 5 months worth of costs that we're seeing here. So that's it for the enterprise funds. And then last, I have 3 slides to go through with you for the proposed budget adjustments. In this first slide, this relates to the central library. The library received several donations and contributions from various organizations, and these adjustments allow them to recognize those donations and to utilize those towards the various programs listed. So again, I'm not going to go through all the details of these. These are listed in the packet.
Just wanted to add something just for the benefit of Councilmember Friedman. So the library and other departments periodically will get money, but typically the library gets donations. Parks and Recreation sometimes will get donations, and it's money that they can spend, but they have available to spend, but they can't spend it until council gives them the budget authority to do so. So even though the money's in the bank, we have to come to council to get approval to increase their budget in order to have the authority to spend those dollars. And you can see it's sort of a balanced entry, because we're not suggesting using reserves for the increased appropriations. It's being funded from an increase in revenues, or what we call estimated revenues. So the budget is still balanced, but it gives them the authority to spend those dollars.
So on the second slide, I just wanted to point out a couple of these budget adjustments. So each year, at the end of the year, staff look at the actual revenues. This is what we call the estimated surplus reserves. So we budget expecting to have a certain amount of reserves available at the end of the year, but then when the year is actually over and we look at the actual revenues and expenditures that occurred, we take this each year to council, and council determines an amount of that to be transferred to capital to fund future capital outlay. So in this last year, I believe it was back in October, we brought this to both your committee and to council, and the estimate was about a $1.6 million surplus to be transferred 100% to capital outlay. Subsequent to that, there were a couple items that subsequently went to council to use part of that funding, and so this is the net amount. And so we see this is a little less than 1.1 million. Are you going to say something?
Yeah, sorry. Again, just to kind of fill in some of the blanks, we have a policy in place today that says that at the end of each year, to the extent we have any surplus, so revenues exceed expenditures on an actual basis, we will transfer 50% of that surplus for capital. It sort of augments our annual funding for capital. In a few years prior, we had suspended that policy and allocated only 25% to capital because we were below policy with our reserves. And but the idea is when we're at policy reserves that we would transfer 50% to capital and the other 50% to maintain reserves. This past year, we actually got to a point where we exceeded our policy reserves for the first time in 10 years. We were always below or at. So we were somewhere around $1.6 million above policy at the end of last year. And so council directed us to transfer all that money, that extra money we had above policy, to capital to fund our capital program, again, to augment that program, that annual program. We typically put about $1.4 million into our capital program each year out of the general fund. So anytime we have extra money like the surplus, it really helps us and fund things like playground equipment and restrooms and things like that. So this is the $1 million net of that 1.6, as Ms. Tomaszewski indicated. We use some of that for other purposes per council, approved by council, but that's the net amount we're now transferring. And we'll be programming this money as part of the FY19 budget. So we're working on that today, or around now, or this time of the year.
So then the last item I just wanted to quickly touch on is originally the fire department had planned to start their 41st Fire Academy in fiscal year 19. That's now been moved up to the second half of this year. Because of that, staff are requesting the appropriation authority to fund the Fire Academy. The money was originally budgeted or programmed for fiscal year 19 as part of those reserves that would have been that we're transferring up above, but they want to utilize that sooner. And they're also anticipating that there will be sufficient additional mutual aid revenues this year that will offset some of those costs. So again, we will be bringing this back at fourth quarter to true up all that mutual aid activity. So this last slide, this first item, this is the other half of the surplus. So the budget adjustment we just saw on the last slide, that was coming out of the general fund, and here we see it coming into the capital outlay fund. And then the last item, this relates to the water capital fund. In this case, staff are requesting that $350,000 be transferred from the Cater Treatment Plant Equipment Rehabilitation Project. And it's my understanding that that project's either almost done or nearly done, and staff have identified savings in that project to be used for the South Coast Booster Station project. In this case, this booster station is a critical component of the water supply, and as the project was originally expected, or they had originally thought they would repair specific equipment, and upon further review, it's been determined that that equipment is actually past its useful life. So if they were to repair it, they'd still have to replace it anyway. So in this case, they're asking to go ahead and replace that equipment. And I did want to also note that there is a joint powers agreement with Montecito and Carpinteria Valley Water District, and that 80% of the costs towards this will be reimbursed. So that concludes my portion of the presentation. And just to recap, we ask that you accept the interim financial statements and approve the proposed budget adjustments. And we open it up for questions.
Do you have any questions? Any public comment? Seeing none, is there a motion?
I'll move to accept the interim financial statements for the second quarter ending December 31st and approve the proposed budget adjustments.
I'll second the motion. All those in favor?
Aye.
Aye. Motion passes.
Thank
Thank
you.
you.
Thank you, Mrs. Tomaszewski and Mr. Samario.